Hi guys, this is Simon with Trade and Perform Coaching, doing the trade review for both NQ and ES for Friday, and that would have been the 26th of September. So the month has flown, and it's actually turned in. We've really changed nature in the market over the course of this month, and so again, remember what my objective is of doing this is to help traders start to get profitable, and really, if I can, help them to start to get profitable immediately. Not always the easiest task. It requires two steps. The easy step is helping people get rid of their difficult trades. So I want to cover that really quick. Where do you get rid of the trades that cause you the most damage? Well, number one is fatigue areas. When you've been trading all day, the trade in the last hour, I'll say consistently, if all the traders I talk to, very few traders can pull off a last hour trade successful. There are some who can. There's no doubt about it. Okay, but the majority of us end up either losing money or break even due to several factors. The first factor is last hour. That's where the majority of algorithms fire. 80% of all the algorithms of the day go off in the last hour. It's hard to compete with computers, okay? I'm not saying you can't. I'm just saying I have a very difficult time doing it. Number two, you have the psychological issue of time compression, okay? When you start off the trade in the morning, even if it takes an hour or two to make the trade, let the trade work itself out, right? If you need that kind of time, you're able to at least have that pressure of knowing, A, if I have to close this trade, I'll probably get another setup, right? And B, even if this trade takes a while to develop, I have the luxury of time. In the last hour, that clock is ticking in your head, right from the start. You're fatigued if you've been working as long as I have by the end of the day, right? And you had the pressure of competing against the algorithms. So first thing is, for most traders, if I can get them to drop the last hour trade, there's a few exceptions to that rule, but for the most part, if I can drop that last hour trade on a consistent day in, day out basis, a great deal of their losses disappear. The next so if we can get rid of the bad trades, right, as a coach, where's the next area? Where can I get you to the profitable trades? Well, I can describe that. After at least the first 15 to 30 minutes, sidestepping that first 15 minutes keeps you out of open drives higher and open drives lower. That's to give a brief description of what that is, if you don't already know, is just when the market makes a violent move in one direction or another. Okay, if you trade in that area, you have to be willing to accept that you might get run over one way or the other, right? And what I find is a lot of traders dig such a deep hole in that first 15 minutes that they spend the rest of the morning with their highest odds setups digging out from the loss they take early on in the day. Remember, it only takes one or two good trades a day to build a consistent, profitable trading record, right? And consistency is the key to this thing. You have to remember there's two big factors in futures trading. First of all, on the retail side, there's over a 70% failure rate. I'm not going to cite the sources, but I've been in this business for a long time. I've seen a lot of people blow up. It's really easy to do. The next part, and this applies to people who don't blow up, but the boom-bust cycle is huge, okay? Boom-bust is I make money for a month, the market changes, I lose money for a month. And you can go through, in the biggest of that cycle, and this is as identified by Dr. Brett Steenbarger, not me, okay, is the 3-year cycle. Can you imagine making money for 3 years and then giving it all back over a period of time? Okay, so there's two components that go, there's three components, maybe four, that go into becoming a successful trader. The first is technical knowledge, competence. But that is not the key to making money. That's the base requirement for making money. Okay, number two, self-management. Are you doing meditation, exercise, and are you learning to stay patient and relaxed, right? That's number two. You have to be able to be relaxed to stay in a learning mode. It's incredibly important. And Dr. Steenbarger and also Dr. Andrew Menaker talk extensively about this. Two guys I can highly recommend for help on the psychological side of trading, right? Then, so you've got the base knowledge that you have to have. That's what most people work on, right? But that's the base, okay, the fundamentals. Then you have yourself. Can you manage yourself? Do you know when you're overtired or undertired, right? Plays a big factor in your profitability, right? Then the last piece is knowing what I would call your home run shots are, okay? And I took one of those on Friday. It did not work out, okay? But I did not take a significant amount of damage, and I had two factors working against me, and I'm going to go through those right now and explain how they affected what should have been a very good day for me and turned out being not a terrible day, but a down day for me out of what's been a spectacular 2 weeks. So let's recant and jump in real quick and see if this will help. I try to keep these shorter these days if I can. So let's see if I cannot keep this up time-wise to a reasonable amount. So the first thing I said coming into the day, if we look at the volume profile, we have two volume profiles that were very important. The ES and the NQ, and I cited two things that were important. First of all, on ES, we have essentially two trading areas. From here to here is the bottom of the range. From here to here, this was the original range. It expanded out to 1970, right? We had an NQ. This was the original bottom of the range, right? And this was the original top of the range. Failure to break out here, failure to break down here. So let's look at what actually happened from a volume profile standpoint, a bigger picture standpoint on Thursday and Friday. So let me pull up my drawing tools really quick. There we go. So what essentially happened here was we opened below balance. Okay, we've been here before on NQ. As you can see, we've opened below balance. So this was the new lower end of the supported range, was right in between these two levels right here. And in ES, we clearly opened below balance. And the problem that most people are looking at, if you look at most professional traders, is they're seeing all of this area down to this point right here as relatively poorly auctioned, meaning that the market would like to come and re-auction this. Same thing in NQ, somewhere between here and here, the market would like to re-auction it. So in a bigger picture, all we accomplished is we were unable to break the prior support area, this 4011 area. We opened, and I said before the open, in order for ES to roll lower, we were going to have to get NQ to break. That was in the live market preview, okay? And I said that I would be pressing to see if I couldn't get it to break, because in NQ, if you'll see, excuse me, ES, if you'll see where we opened right at the, just under this 1969 level. And the idea was that we've tested this area the prior couple of times and on the prior day session and overnight, and that if we could get back down here, we could break, and that would open the door down to, I thought, about 1940 at least, and eventually down into these 1920s. Okay, so that didn't happen. What did happen was we opened up, we tested lower, we held. NQ failed to test the prior day's low or even close half gap, and I'm going to translate this into a real chart in just a moment. But then look at where we ended it today. We've just ended up back in the bottom of the prior range on NQ, and we're still below the prior support area, what is now middle support. We're still below that on ES, okay? So the picture has not gone from bearish to bullish. What happened on Friday was, too many, in my eyes, too many people pressed for the push below 1959. That failed. They tried it all morning long. It was a standoff between bears and bulls going into lunchtime. Neither bear nor bull was able to exert his weight. The fact that NQ was unable to retest its lows kind of tipped the scale towards the buyers, and finally the bears threw in, the weaker hands on the bears threw in the towel, caused a short squeeze, and we got into what I call a poorly auctioned area, and we pushed up to the high. That's all that's happened. We have not reversed. We're not bearish nor bullish now. We kind of have a two-sided market, which I said on Thursday night, if you look on the private Twitter stream that I have, that I was both willing to be aggressive on both sides. But on that Friday, I really thought we had a good chance of breaking, and I said coming into the day, I was going to try to do something different than I normally do, and that was to press the downside. Let's see how that worked out. So if we go to the charts, we can see that let's start with ES. Okay, so we can see, first of all, this blue area, when I post the charts to my clients, this indicates an area of poorly auctioned, right? There are still support resistance zones in these areas, but I don't like to take contra trades in these areas because the poorly auctioned nature of those areas usually allows the market to trade all the way through with little pause. Does it have to do that? No, but it's likely. And you got to remember, where I'm placing my focus or trying to place my focus is where I have the highest odds. So I took a short off the open at 1963, and I clearly got I got a rotation all the way down to essentially 1960, 1959.50. It was a 3.5 point rotation lower. I took 2 points, and then I took 3 points on half my position. And then I said originally my plan was to move the trade And then I said, because I was pushing to the downside, my plan was to use the profits from those first two scales to get a net break even. I moved my stop down to, I believe, net break even, maybe a little bit lower. And then what my hope was is that we would come in here and we would simply flush the lows, okay? Now compare that to what my normal trade plan is. My normal bread and butter trade plan to help clients and myself for that matter, normally when I come in without a bias, okay, is to simply make money, which is first time into the zone, fade, first time into the zone, fade, first time into the zone, fade, right? So that's one. If you follow just the basic trade plan, first touch of the zones, right, there's 2, 4, 6 points on the day. Now think about that. If you'll go back and look at the charts that I've posted every single day, we're at about a 90% win rate on the zones right now for the past, I'd say, 30 to 50 days. The win rate fluctuates between 70% and generally 90%, okay? And right now it just happens to be that because we have a two-way market, we're getting a very high hit rate on both sides of the zones. Okay, so here was another factor, and I want to point this out. This is psychological. I've got a personal issue going on in my family. I didn't sleep very well that night, and I used up all my energy, okay? I used up all my energy shorting that first short, and I was tired by the time it got to the second point. I had said beforehand in the market I would like to short here as well as it got up here the first time, right at the back of that zone, and I failed to do so. Okay, that's because there's 2 points that most people, especially trading rooms, want to convey to you. One is that there's such thing as this invincible super trader, right? That you don't have to have all your, you can always hit it 100% of the time. I was too tired to take the trade. The trade was perfect. It worked out exactly like I thought it would. I already took my shot. It was a big shot to the downside. I got out break even, right? If you look at the balance of the day, we then went from there to a fight. So how could you figure out who was winning? We couldn't get below Globex low. We couldn't get above Globex high. We were essentially boxed in here. And then I took a series of smaller trades. If you look, we had formed a pennant in here. And I tried to make this trade work to the short side 2 times using both a break here and here. These are not normal trades for me, but again, remember, I was still trying to press for the downside push. We had not yet gotten to New York lunch. I tried this twice. It failed twice. So by the time I got to my second failure of the day, first of all, I took half-size trades on these. I'd already taken a big shot to the downside on break even, so I ended up taking 2, and then I had one more trade, a third shot, where I ended up with a series of smaller stops, which totaled about, on a full-size position, a 4-point stop for the day. So the fact is, on a day where, had I just followed my normal trade plan, okay, had I just followed my normal trade plan, I would have ended up with at least 6 points, if not more, assuming I couldn't identify this upside push, right? But I made an audible. And the reason why I called that audible was because there's sometimes when you look at the market and you got to say, I have the potential for a really large trade here. And in my philosophy, when I'm coaching guys, I think it's really important that if you can identify areas where you have the potential for a really large trade, you've got to take that shot, right, to make those quantum leaps. That comes right out of reading George Soros's philosophy and Paul Tudor Jones' philosophy. When you've got the market in an area where you think you can get a big shot, and you can do it, this is important, and you can do it with controlled risk. Really, really important. I didn't say forget the risk. I said if I get to my trade location and I can put the trade on. Unfortunately, I'm coming off what's probably the biggest week and a half of the year for me, P&L wise, and I'm tired. I pushed really, really hard, and I've been trading more markets than I normally trade, and I got too tired to continue pushing that trade, and I got to the point where I started probably making a few mental errors. So I stopped. Right? I didn't fight that afternoon move, which saved me. That was my gut instinct because I overbought into the short side trade. So let me show you what I was talking about there. How am I doing on time? All right. So let me show you what I was talking about there. When you look at the volume profile, okay, what normally happens when you notice on ES, okay, we have fallen out of the balance area, right? What happens when we fall out of balance area to the downside? Well, a lot of times you'll end up with a move like this, which this looked very similar here, broke us out of balance, and then a further push lower, and if you'll notice this push was approximately 20 points down, and that's what I was trying to achieve here. It failed, but it essentially cost me very little money to take a shot at doing that, right? Let me show you another area where that worked very successfully. okay? If you look at this in essence in reverse, it's this move in reverse right here, okay? It's the flip side of this reverse. This reverse gapped out of balance, right? And we took off to the upside. Now, if I believed that we had a possibility of running back to this 1940, which would have been the top and the bottom of the old balance area, it just didn't pan out. But sometimes, on occasion, that can really, really pan out. And as you can see, this would be the last time we had this would have been back in early February, where we broke from balance, and then we continued down for multiple days. I want to point out a couple things about this. The theory isn't necessarily broken. You can see that we actually pushed up afterwards, and that the next big push down didn't actually come till 2 or 3 days later. Really, really big clue in that process. Okay, so next, moving on down. So the point of the matter is it didn't work, and there was a couple clues I missed. I want to break down what I missed in the live market preview, because I really sincerely believe you can learn a lot from, you have to pick up the nuances to learn. And so the first contributor was I was really tired trying to make decisions, and so I stopped. That was probably my best decision of the day. I didn't dig a significant hole. But looking into the other piece is NQ. Now you'll notice one thing that was key. We had to get below this low on NQ, and if you come back over and look here, okay, we were unable, here was the gap, was right here. We were unable to get below the gap, and I mentioned that before in the live market preview. I just didn't convert that over to making a good decision during the trading day. I just simply got too tired. So I'm well rested. I've made sure I've done a lot of meditation over the weekend. I've taken care of my mind and my body with exercise, spent time with my family, and I've got my trade plan together for the coming week, right? Which also for me includes taking it pretty easy on Monday to give myself some space to rest. And I'm trying to draw a bigger picture for those of y'all that are not accustomed to this, because I'm running this like a business as opposed to a day-by-day gambling opportunity, right? I know that I need some rest and some time away. This is a very high-performance, high-demand job. I know I need some time away from the screen. And so if I don't get well positioned in the first hour on Monday, I will probably take the balance of the day off unless we make a big, far extreme swing to the downside, in which case I'll look. But where I won't wear myself out is in the smaller areas in between. I'll let the market come to me. I know if I can rest or take it easy for a day or two, that I'll be much better prepared to kill it towards the end of the week. And we have a lot of really important data coming up, including non-farm payrolls on Friday, and I want to be mentally prepared if an opportunity presents itself to take advantage of it on Friday. So therefore I'm going to rest up a bit early in the week so that I can push towards the end of the week, hopefully for a very good week. So areas I missed the lack of gap fill on NQ, and then of course one could have argued, just as I argued, that the bulls really couldn't make a push into Globex high here earlier. They attempted. They also couldn't get below Globex low. It was net neutral. Fighting hands, finally the bears gave. But you'll notice we really didn't even push that far up into or even to the 50 back or to the 60 back, right? That's still possible that we could do that Monday morning or tonight, Sunday evening in the overnight market, okay? So let's bring it all back together for one last picture so I can bring it back in. What I was trying to accomplish was to get a break both in NQ and ES to the downside down to these open gaps that were below 39.80 in NQ. And then again, to the bottom side, I had highlighted my high odds areas as being this 1945, which is where I was looking to flip and take a long, right? So I was going to try to push it down to the short side, then I was going to try and flip and take it to the long side. I'm neither bearish nor bullish. I took my shot. I got my scales on my big shot, and I ended up net breaking even on the trade, but I could have easily walked out with a profit on the day. Had I come in without that bias or without wanting to take that shot, I obviously would have had a very nice, profitable day, right? And many of the people in the room both had long side and short side trades that were very profitable because they were following their trade plan, which was to take the first touch of the zones, my most basic strategy, right? the last piece of that was I took a couple more shots. I realized that the market was not cooperating. I was pushing too hard to the downside. On my second or third stop, I forget where it is now. I forget if it was the third stop on the day, but second losing trade, or if it was the third losing trade of the day. I ended up losing net about 4 points across the board between NQ and ES. Okay, that's normally one stop for me on the day. It's a very small price for me to attempt to push the downside. I was just a little, either I was a little early or I was tired. One of the two. Either way, it didn't work out. And the leadership that I want to show there is I stopped trading in the afternoon. I didn't chase it up and say, oh, I have to catch it, nor did I go up there and say, well, now it's extended too far, it's got a short. I realized we were in poorly auctioned area. I was just going to have to let the market go. That's the part where you start to become a professional trader, okay, is when on occasion you're going to have a thesis as you develop, right? At first, all you want to know is how do I make money on a regular basis? I've attempted to address that by creating those zones and creating a set of rules around those zones, okay? On occasion, when I'm in the room, I'm going to try to address how to get those larger trades. I've had some really, really big trades in the last week and a half, and I feel I owe it to my members who are in the room to say, hey, there's an opportunity here. If you want to take advantage of it, this is the trade plan. If you don't want to take advantage of it and you just want to go with the base 2 points and move on, here's what we're going to do. First touch of the zones each time, you take the 2 points. Occasionally, those two strategies are counter to each other, and all you have to do to resolve that is decide, hey, I'm going with Simon, I'm going to take a bigger shot here, or I'm not going with Simon today, I'm going to use the most base strategy, take the first touch of the zones, collect my 2 points, and move on. All you need is 1 or 2 trades a day, 2 points apiece to start building an account. The larger trades where we're getting the bigger swings, that's more advanced stuff. And I cover that with my one-on-one coaching sessions, and I cover it to a certain degree in the room, right? You just got to make a distinction as to which one you're going to follow, and once you decide, have the emotional commitment. There's ways to build that, the emotional commitment to staying with that trade plan. But what you can't have is both. You can't take a big shot to the downside and then still say, but I still want my 2 points and be gone. That's, you got to choose. You're either eating seafood or you're eating steak. You can't have both. There's no surf and turf here. You got to, and I know that was a terrible analogy, so forgive me for it, but you can't, what I'm trying to stress is once you've made the commitment to one, you can't force your hand on the other, right? So I made the commitment to the break to the downside and the bet that we weren't going to roll back to the upside. All I could do once I realized I was in the wrong position there was stop, and that's what I did. I protected my equity. I took a very small drawdown, particularly relative to the number of wins I've had in the last couple of weeks, and I'm in fine shape for the week to come. So my name is Simon. I'm with Trade and Perform Coaching. If you would like to learn to trade like a professional trader, I would encourage you to ask for a free 7-day trial. Come see what it's like in the room. There's a lot of learning. There's a lot of education. There's a lot of money making going on in there. Okay. If you need more help than that and you need to actually work on the mental side of your game, I would recommend one-on-one coaching either with me or someone who fits your personality, right? Whether it's with me, Dr. Menaker, Dr. Steenbarger, if you can afford to hire him. There's a lot of really good guys out there. But trying to do this by yourself, in my opinion, is almost crazy. There's a lot of good help, and if I'm not the right guy for you, ask me. I'm happy to recommend you to other really good trading coaches that will fit your personality and your trading style and help you succeed. I hope you will seek help, right, because the majority of retail futures traders are losers, and it doesn't have to be that way. You can be a consistent winner. Anyways, my name is Simon. I'm with Trade and Perform Coaching. I really believe people can make money trading futures. You just have to have the right approach, both mentally, physically, and emotionally, and it can be done. So anyway, have a great weekend. If you'd like a free 7-day trial to the live market preview, email me at tradeandperform@gmail.com. And it's $95 a month. I think it's the cheapest $95 a month. I go through the live market preview in detail, trade plan, post both the NQ and ES charts daily, and most days I stay on live throughout the morning session, right, walking people through what I see in the market and the trade setups. So at any rate, have a great day, guys, and enjoy your weekend. We'll talk soon.